Yes, from the title you can tell that this is a trade I took which ended up to be a loss. Right, not so many traders on YouTube will tell you about losses. They just flaunt to you the wins they take, but you learn more from your losses at times than your wins. So without wasting much time, right, I won't do much of the talking. Let's just get straight into it. So how did I take this trade? Why did I take this trade? And what went wrong in this trade? So you can learn. We are not here to look at my face. I know my head looks rough and all, but this is a video to learn. Let's get into it. So looking at this here, I still have my marked out regions, right? So we are going to be using them. You can see here, this was, let me zoom in so it's bigger for you guys to see. From this point here, right, from this point here, this is Solana against USDT, Solana USDT on a 15 minutes time frame. So we had a strong sell to the downward side, very massive sell, right, very massive, which broke structure. As you guys know, I trade supply and demand, smart money concept. So you want to be looking at these kind of things. It was an aggressive sell, which is very good, okay, and then it broke structure, giving us this supply zone right here. And if you are looking at what is it on my chart, guys, this giving this break of structure and all those things, I use two indicators. We have them here. So it is the SD boring explosive by Nephew Sam, and then the BOS and then chalk by Nephew Sam. So SD, supply and demand, marks out every supply and demand zone on your chart. Then the break of structure and change of character does that also by marking them out, so you can see those things much more easier than trying to look at it with your naked eyes. I'm not saying you shouldn't know what a break of structure looks like, but I mean, if there's something that can mark it out for you which goes in line with the strategy I trade, then I'll use it. So I don't use any other indicators apart from those two because I really don't need them. So as I was saying, this is a strong supply. So we had a huge sell to the downward side that broke structure and broke structure again for the second time. We had a kind of little pullback which grabbed liquidity again, and then because some people saw this and were like, okay, let's go long, and then had another break of structure to the downward side, and then we had a little bit of consolidation here, another break, another downward side. You can see the change of character indicating that the market wants to shift again to the downward side. We had another sell-off again, and this was the last place in which the market sold off to. Then we had a huge rejection candle here to the upward side, which means buyers really came in control at this place. So I think I had a line here. Let's draw it back. I had a line here. I think I removed it or something. So you want to look at this, you want to call this liquidity or whatever your support line or your resistance line. Like you have the resistance and you have the support, so you can call it the line in which liquidity is resting. All right, so we know liquidity is resting at this point because it didn't go below this certain point. And now you want to look at something. What do you see here? You see the last sell candle before the buy candle, and then the buys just kept piling up and up and up. So at this point you can see this is a demand zone, right? If you know smart money concept or supply and demand, you understand that this is a freshly created area of demand, and this is an area of supply. As you can see here, it was marked. I already marked this. I set my alerts because you do not want to be looking at the charts all day long, every candlestick or candlestick. Just set your alerts and walk away. So once price gets to your point of interest, you get that alert and you can come and see what you need to do on the chart. So I set my alert at this supply region here, and then I was happy. As you can see, this demand zone also has been created, and I also set my alert. So whenever price comes back to this demand region, I want to see how it's going to react. So should I take a long or not, depending on the reaction I get at this point? And it hasn't come back there. And we can also see this supply zone is what I also wanted. So looking at it forward, we had this upward, upward. Seller started coming in a little bit, and then it didn't touch. All right, it didn't touch, came close, and then we had a sell-off, a change of character to downward side, and then a sell-off. I think I need to zoom in here again. A sell-off. Now you could see a huge candlestick that came in and tapped that supply zone. So after it tapped that supply zone, immediately it rejected, and then we had a downward move, a downward push. At this point, yes, it tapped my point of interest. I could have gone short, but at the same time, you want to have a specific way in which you enter trades. All right, I personally enter trades at a change of character in my point of interest, or which is in my supply region. So I want to be looking for a change of character inside this supply region so I can take a very good entry. You understand? I don't just want to buy at market price because price is rejecting. Some people trade like that. I don't. All right, so we come here like this, and you can see the first touch, which is the 3 minutes time frame. Remember, you want to use the lower time frame for a clean entry. So if you look at the 3 minutes time frame, see this, see, and then we had, let me zoom in so you can see much more better. All right, so we tapped our supply zone here, came down. We broke structure, but we never saw a change of character. So I couldn't capitalize on that trade, unfortunately. I was looking for a change of character, but it wasn't there. And then I do not just want to buy like that or sell like that. All right, so it's respected that supply zone, true, but it didn't give me a good entry for me to enter, so I stayed off that. Now we can see here, price dipped to this very point and started buying off back again, forming another new area of demand, which I marked here. Might be an inducement, it might be reliable, we never can tell, but you can see price is falling back. Most likely this demand zone is going to be an inducement. It won't hold. This seems to be the most more reliable one in terms of the analysis. This might not hold, but we don't know, right? That's trading for you. We don't know. So moving on, we had price go again to that supply area. So it tapped into that supply area. At this point, I was on seat. I saw it happen, and then price rejected again. So you can see immediately it tapped the supply zone, it rejected. So now let's look at it on the lower time frame where I actually entered for this trade, which turned out to be a loss. So as you can see, price tapped in there. As it tapped in there, it respected and came out. Right, tap in, come down. Then we had the last buy up before a push downwards. And as you can see in this place here, we had a change of character. Zooming in again to see, we had a change of character. The indicator marked it happening as a change of character. So now, how do I enter this kind of trade? Simply take a shot like this. All right, you want to look at the last buy before the sell. So people enter at change of character line like this. I do not. I enter at the last buy before the sell. So this was the last buy before the sell here. And then where's my stop loss? My stop loss is going to be at this fractal high. So my stop loss was at the fractal high here, and targeting a 1:2 risk to reward ratio. Nothing much, keeping it simple. Crypto has been so volatile. I don't want to be having very high risk to reward ratio trades. And you can see what happened here. Move this like this. All right, okay, good. So this was my setup as at the time. I had a pending order, and you can see price kept falling off. Buyer started coming here, which gave a kind of hammer. Okay, so I was like, yes, I intend for price to pull back to this supply zone freshly created on the 3 minutes time frame, and then we have that downward push probably to this newly formed demand area. But this trade hit my stop loss. Was I mad at it? Absolutely not. I wasn't. Why is that? Because I didn't just enter this trade because of intrinsic. It actually went in line with all my all my rules and all my criteria. A change of character was formed after tapping into a valid supply area. So yes, I took the trade, but it didn't just play out, and it was a loss. As you can see, there was this huge momentum. Okay, demand zones upon demand zone kept piling up, and then hitting my stop loss. So what can we learn from this trade? Look at this. You can see it on the 15 minutes time frame. You can see this was the stop loss, this was the entry. At least I expected it to kind of go down a bit, but you can see this huge buy candlestick that came, and now we are seeing a kind of sell-off after, you can see you have lots of supply zones piling down and down and down again into the downward side. So I'm not entering this trade though, but if you want to look at it, or if you want to enter, which it's looking more like a consolidation. Okay, we're in Asian session right now as at the time of recording this video, so Asian session kind of, I don't trade it. So you want to make your stop loss something like this, and then your entry, the last buy before the sell, targets in a 1 to 2, something like this. Yeah, and as you can see, price came back to tap into it, and it's still going down. Okay, it's hit TP. That's hit TP. So my analysis was still correct, right? But the market just did what it did. So had it been I kind of re-entered at this point, which I didn't, right? It's going to tap into my entry and then print out at my exit. But hey, you cannot really get mad when the market does what it wants to do. You cannot always be correct. That's the truth. People will tell you this. It's just how I turned $100 to $200 one day and all those things. You cannot always be correct, but the things you can do is you can always make sure you are taking one step backward and more steps forward. So whenever that backward step comes, it takes you one step back, but your next trade is going to be a 2-hour, your next trade is going to be a 3-hour, and it will still recover for your losses. Yes, the losing streaks will come. It happens. Everybody goes through them. But if you are taking more steps forward than you are taking backward, it will still keep you in check, combined together with a very good risk management and consistent risk per trade. You do not want to be traded. I do not believe in all this. Some people tell you when you see a very, very good setup, when you see a very, very nice setup, hit it with bigger lot size, risk more on those kind of trades. It will just hurt your accounts. All right, why should you be taking trades that are bad in the first place? Take any trade you should take should be an A+ setup, right? A trade that goes in line with every single thing that you want or every of your criteria. So if you see any trade that does that, treat it the same. I treat all my trades the same. There is no B, there is no A, everything is treated the same and the risk is the same. All right, so that way you are able to cut down your downside. All right, you already know how much you're going to lose before entering that trade, and are you comfortable with it? What will it look like in your equity curve when you take that loss? And you will be fine. All right, so before I end this video, let's look at the higher time frame, right, for context, so we can see on the 1 hour. You can see my first trade here. This was my first trade. It was actually within a newly formed demand zone, right? So it wasn't really looking good. Yes, there was a supply area, which is that same supply we looked at in the 15 minutes, but it tapped into that supply area, and then we had a rejection candlestick, which was to the downward side. Happy to take the trade, but boom, we had another upward push, and now this one, which I didn't take but I just analyzed, and then we can see it is actually in line with the 1 hour supply zone here, which hits the TP, but I didn't take it. All right, we leave to trade another day. So this is a rare video of what you will see on YouTube, people explaining their losses, you understand, and then showing you what it's like to take losses. And then yeah, that's it. I'll see you guys in the next video. Just remember this: you cannot always be correct. It doesn't matter what strategy you trade, whatever it is you trade, you cannot always be correct. So that's why I say you make sure you take more steps forward than you take backwards, and you will be profitable without having to be right all the time. I'll see you guys in the next video.